see if it's working or not because I don't have a.
There we go.
There we go. Move it forward. So what's the secret with the clicker?
I gotta just make sure it's on.
Okay. Otherwise, we're stuck with one boring slide for the whole thing. Which,
Oh,
Secret is you have to know Eric.
you have to know Eric. That's right.
I can check with.
Or you want to just do it from there?
Yeah, I can do.
Okay. All right. Okay. So at a lot of these crypto conferences, we hear a lot of amazing ideas, which always blow me away, and I'm barely hanging on by my fingernails with some of these things because I don't really understand a lot of what is being talked about. This is very easy. This is something where we're using the technology of NFTs to solve a very, very old problem. When I say old, I mean decades, if not hundreds of years. And that problem is diamonds should be a good investment, but hitherto they have not been a good investment. And the reason is the structure of the marketplace. The concept behind what we're doing is if we can use NFTs to solve that problem and unlock that logjam of demand for diamond investment, it will open up a $12 billion industry. Okay, let's go to the next one. Start with our team. We have some, obviously when you're doing something like this, you're combining the diamond industry with the blockchain industry. And we have some of the best, most reputable, most well-known people from both the diamond industry and the blockchain industry. On the diamond side, I'm the guy that invented online trading of diamonds. That was something we did in the late 70s, early 80s. We actually introduced online diamond trading to the world, and it changed the industry forever. Okay, that's all the B2B and e-tail sites that came from that basically flowed from my original company called Polygon, not the second layer chain, but the diamond company Polygon. Krista is one of the top people in the industry in terms of trade shows. She founded one of the largest trade shows in the jewelry industry, the JCK show, Luxury by JCK. William Boyajian used to be the 20-year past president of the Gemological Institute of America. These are the people that invented the diamond grading system that everyone uses today. Over here, Eric Voorhees, a lot of people in the crypto industry know him. He's my son, founder of Shapeshift and lots of other things. We all know Michael Turpin, and Jeff's another top guy in the diamond industry. Okay, next. Right, so the idea is start with gold. What percent of the gold market is from investors? 30%. If we could achieve a similar ratio of the total demand for diamonds being 30% of the demand, you do the arithmetic, you're looking at a $11 billion new demand for diamonds that we can unleash if we do this right. Okay, that's the goal. If we unleash an $11 billion new demand for diamonds, we can capture 10% of that new demand, we're a $1 billion company, and that's the trajectory that we're on today. Next. Okay, what makes diamonds a great asset? It's very simple. They're kind of like gold, but sort of better. Gold outpaces inflation. It's a great hedge against inflation, but it's also quite volatile. Diamonds do the same thing, but they tend to be less volatile. So we all know about diversification. Diamonds should be a perfect way to diversify a hard asset portfolio, but it gets better. They're also very, very portable and concealable. You can, if you're in Ukraine and you have to flee the Russians, for example, you can put $1 million of diamonds easily into your shirt pocket and flee to Poland. Okay, you can't do that with gold bullion, so that's another advantage that diamonds have. Next. But here's the problem. This is why diamonds have been a terrible investment. No one knows what they're worth. You can't just go online and find out what the thing's worth. Good luck trying to sell it. You can, as someone was saying about investments, you can buy them easily. How do you sell them? Even more so with diamonds. Worst of all are the spreads. You're buying at retail, you're selling at sub-wholesale, you will lose 50% on average just walking out the door. Okay, those are the problems. Next, we solve them with NFTs. Real quickly, we issue an NFT to a specific diamond. The diamond goes in a vault. The NFT then becomes essentially the certificate of ownership, the title. And that token can then be traded effortlessly on token trading platforms or just in any other way. And the friction, the thing that causes you to lose 50% of your value, goes away. You're no longer selling here where you bought here. You're selling at the same level that you bought. Spreads drop from roughly 50% to more like 1 to 5% average. And you can sell with a mouse click. Okay, next. Full confession. We thought when we started this company that our customers were going to be paying us in crypto. We'd send them the NFT, they'd send us the crypto. That's still set up that way, but our customers 100% are paying us in checks. Literally, they put them in envelopes, they put them in the mailbox, and they come to us like, what's this? We have to open it up and actually take it down to a bank. You have to drive to the bank. You do something in the back of the check, and it's just crazy. It's like, what is this? But you can't really argue with what the customer wants, right? So that's how they're paying us. Next. We're doing some fun stuff too. We have another division that we're just launching called our Collectibles division. This is where we're taking very high-end product, very unique pieces, tokenizing them, and in this case, we're going to be fractionalized tokenizing them, if I say that right. This is the first thing we're launching is the Miss Universe crown. This will happen before the end of the year. It's a collectibles thing, not an investment thing. Next. Another thing we're doing in 2022, we're doing an app where you'll have, just like you're used to with all your other investments, you'll have full access to your portfolio. You can buy, you can sell, and so forth. Next. We've been getting great press. New York Times just did a big article on us. Next. We've got all kinds of great strengths. Next. I'm out of time, so just trust me, a lot of great strengths. Oh, I still have 5 minutes. I thought you were. Oh, that's the 5 minutes. I thought that was.
Your strength.
Okay, okay, all right. Count them. 1, 2, 3, 4, 5. We have some cool patent pending technology. The European Patent Authority, whatever it's called, has already given us the green light on the first of the patents. The second one's the more powerful one. We'll see what happens there. We're the only diamond-specific NFT trading platform. We have marketing agreements with influencers that are driving our sales. We'll get to that in a second. We have a sourcing relationship with De Beers site holders. That means we're buying directly from the highest source in the food chain that we can get. And some other things. First mover advantage is one of the best ones. That's how I became successful with my first company. We got there before anybody else did. Next. Okay, this is my favorite slide. So we're just going to look at this for a second. This is what's happened to our sales. We were not expecting that. I've never been involved with a company that exceeded its sales estimate. It's always, you go to the board, you explain why you're not quite there yet, you ask for more money. We're having the opposite experience here. We started out very slowly, and you see what's happening. And of course, when we're trying to become a billion-dollar company in 5 years, this is the kind of growth you need, and I think we're on track, even though it's early in the game. The point is that this sales chart demonstrates that the model is working. The investors that are already investing in hard assets, they are, in some cases, liquidating some percentage of their gold and silver. They're moving that money into diamonds. It's working. And the main thing I'm doing on this trip right now in the summer is looking for ways to replicate what we're doing in the US in other markets, like in Monaco, in Zurich. I was on the phone with a guy this morning. Singapore is where I'm going after that, and so forth. We've proven the model. We're now just trying to replicate. Okay, I think last slide. We're doing a $2 million raise. We're about a third of the way into it. This is a safe bridge with a 30 million cap or 20% discount in anticipation of a 10 million Series A sometime in the next 12 months. We'll see what the market does. Right now we're, knock on wood, first quarter, we're profitable, so we're in pretty good shape cash flow wise. Be interested to answer any questions or whatever. Yes?
Sure. So just to make sure I understand, I buy the NFT. The NFT is backed by a diamond.
It is the title to the diamond.
It's a title for the diamond. That diamond sits in you guys' vault, and at any moment I can either trade the NFT or I can redeem the diamond anytime from the vault. Is that how it works?
Yes, and about 20% of our buyers, in terms of dollar volume, about 20% have redeemed at the point where they purchase the token. They don't even want the token, they want the diamond.
The NFT.
They prefer the diamond, and no problem. In some ways, we prefer sending them the diamond. We don't have to worry about it anymore. At that point, we burn the token. There is a way they can re-tokenize later. They enjoy the diamond for a couple of years. Okay, now I want to trade it. They can re-tokenize it, $100. They send it back to us, and it becomes part of the system again. Then we reissue the token. Yeah.
So, Jock, curious, when you're trading frictionless NFT, it can be anywhere in the world, right? Party's a party. So if you sell your NFT representing the diamond in the vault somewhere across the world, what does the company do with the actual hard asset? They send it, they mail it?
No, it stays in the vault. See,
yeah.
right, that's why this thing works. Because all the friction that happened before was from moving that diamond around the world, where someone breaks it or loses it or steals it or counterfeits it. But once it's safe in the vault, it's pretty safe. And just, yeah.
Yeah, sorry, I had a follow-up on that question. The NFT, so it is sold once, is the value of the diamond. On secondary sales, do you guys take a percentage of it? Is that your revenue model?
Well, it's an NFT. So theoretically, if you own one, you could trade it to this guy. And we don't build into the smart contract that we have to be part of that sale. But if you use our facilities, 1%.
We cannot economically create gold, but we can economically create diamonds.
Lab-grown diamonds.
Yes.
Yes.
And last year, the largest jewelry chain in the U.S. Declared that they will stopping buying diamonds from the bears, and they are only selling industrial diamonds.
Industrial is a third thing.
Well, sorry, the lab-grown
synthetic,
diamonds, jewelry grade,
synthetic diamonds. Yeah.
Synthetic diamonds.
Yeah,
that's
right.
what I wanted to
right.
say.
Yes.
Have you factored that into your long-term projections?
Absolutely. Lab-grown diamonds are and natural diamonds are following exactly in the pattern of natural pearls and cultured pearls. So we've seen this game play out before. When that happened, every year, this is still going on today, cultured pearls become less expensive, natural pearls become more expensive, so it's going like this. We will never touch lab-grown diamonds. There could not be a worse investment in the world. It's going to be worse next year. Meanwhile, in the last 2 years, for example, diamond prices have been soaring. That doesn't mean they will continue to be, but they're going crazy right now.
So, and each NFT is created for a specific diamond?
Yes.
Okay, so it's very unique. Each NFT
One-to-one.
is very unique.
Yes.
So there's obviously no fractional ownership of the values.
There will be for this cool stuff like the Miss Universe crown, but that's kind of a fun part of the business, right?
Yeah, so because last year actually I sat through the presentation where they were using creating EFT for the diamonds. Same thing, keeping the diamonds in the vault and creating just EFTs but nothing to do with crypto though. Is it something similar about utilizing the blockchain?
Well, there's been a million attempts to create mutual funds for diamonds that can be exchange-traded funds. That's what you're talking about, I think. Yeah, there can be a value to that. It's a very different thing. You're investing in the diamond trading expertise of somebody, and you're basically buying into a diamond trading business when you do that, as opposed to buying the underlying asset. In this case, you're buying the underlying asset, and you're going to go up or down based on the movement of that asset, not the skills of the diamond trading company, if that makes sense.
Yeah, and so if you bought like one specific diamond and you now have to trade it in, so you have an ability to trade the diamonds, or you have to actually sell one and buy one?
You'd have to sell one and buy one. Each one's unique.
Okay.
Yeah, it's a little bit like analogous to art or real estate. Yes?
Talk about your value price index.
Yeah, I'll try to, real quick. And this is the best part of the company, but I almost never talk about it because it's a little complicated. We found a way to create what we call virtual fungibility between diamonds. If you look at all the different gradations for even a round diamond, there's about 530 different ones. GVS1, 1 carat, there's about 530. We found a way to array them, any given collection of diamonds and prices on a one-dimensional scale, so that you can at any point see the best diamond. Out of a list of 100 diamonds, you can see this is the best deal, this is the worst deal, and everything in between. What that does is it creates the ability to have an efficient market. So a person could say, well, which diamond should I buy? Oh, this one at the top of the index. Which one should I not buy? This one down here. That's never been done before. That's the second patent that we filed. So that allows us to create the efficient bid-ask market that the investors have never needed. So it's kind of a big deal, but it's a little complicated.
And all the diamonds are verified by Gemology Institute?
No, way more than that. The GIA these days, the quality control has gone into the toilet. I wouldn't trust a GIA certificate as far as I can throw it. So we take every stone, it has to have a GIA cert, and we then secondary grade it with the toughest grading lab in the world, which is GCal in New York. They reject 80% of the GIA graded diamonds. And because these are the only people that actually guarantee with an insurance policy that the grading is accurate. GIA does not do that. So these stones are absolutely exactly what you think they are. Thanks very much.
Thank you.